Good afternoon, everyone. Namaskar, Nashikas, and this is my first time here. Glad to be here. So, there's this term called social impact ventures. To me, entrepreneurship is always impact oriented. It's always about value creation. You are always creating impact. I'm not going to talk about social impact ventures in general, but what I will talk about is how to build sustainable businesses. And what I've realized is the audience here is much more younger. So I thought I'll give you a flavor of how to fundraise as well. Okay. Quick questions so that I can tweak my presentation. How many of you are startups who have raised funds? How many of you are startups or enterprises who are looking to raise funds? How many are at idea stage looking to build a business? How many of you already have a product? Students? Okay. Based on the audience, I will focus more on fundraise. Where do you get your money from to build your business? Building a sustainable business comes later, and I will try and talk a little bit about that as well. I'll skip this slide. This is more relevant. When you build a business, you've got a lot of different ideas since morning, so I've tweaked the presentation. When you build a business, one thing which is extremely important is having a promoter mindset or an ownership-oriented mindset. What's happening in India is a lot of startup founders are going and raising rounds after rounds, funds after funds, and at the end, they end up with a 5-10% equity stake. If you look at the kind of companies that have been built in India, did they ever go and raise money from VCs? Is the question to ask. To everyone here who wants to raise funding, there are about 1,300 companies listed on the stock exchange. Most of them have more than 50% stake, and I don't think even 50% of them would have raised VC money. There are SME companies which have, which are listed with 1,000 crore market caps as well, and they've not raised VC money. So when you have to raise money, the first thing that comes to your mind is, I need to find a VC, right? What I want to tell you is, no, you should not look at VC money, and I will tell you who are suitable for raising VC money. But there are many other avenues to raise money and build businesses, and your focus should be on building businesses and not just about raising money. There are many, many avenues to get money from. Can someone tell me what is common between all these companies? Yeah, but what does bootstrap mean? I'm a co-founder from Infibeam Avenues. None of them raised VC money. And whenever I talk to a startup, the reason I do this presentation, I work with a lot of startups in clinical trials, in biotech, in social impact, and whenever I talk to a startup, they are trying to raise money from VCs or angel investors or investors. And I'll talk a little bit about that. Their ROI is very different from a lot of businesses that are going to them. And what ends up happening with a lot of entrepreneurs is when they don't know where to raise money from, they end up wasting a lot of time going to VCs, and they get disheartened that, okay, VC is refusing me. But I want you to understand that what is a VC? VC has raised money from investors, from individuals. And so VC also has to return money to the investors the way an entrepreneur will have to return money to the VC. And they say entrepreneurs have 2 lives or more, VCs have only 1 life. So if a VC raises a fund and does not return capital with at least 25% IRR over a year, they will never be able to raise another fund. But a failed entrepreneur will again get a chance to build another venture. So it is important to understand that VC is not the go-to source for raising your funds. In fact, most often you should not approach a VC, you should wait for the VC to come to you. Okay? All these companies, Zerodha, largest broker in India, in fact, they started zero free broking. Imagine no VC money and free broking services, right? Infibeam Avenue's largest commerce payments platform used to power GEM, government e-marketplace, got listed in 2015, did not raise any VC money. Of course, there was family money, there was founders' money in the company. Frappe, open source ERP platform, built out of Bombay, completely from scratch, no VC money. InfoEdge, Naukri, yes, they did, but for a long time they built a business. So I want to encourage founders here to build profitable businesses and not get enamored with a lot of startups which are large and raising a lot of money. They are different, but that should not take away the glow from businesses who are building small but profitable businesses, surviving generation on generation. A few more examples, right? When Flipkart listed in India, and this is a trend that I'm seeing in India, and that's why I do this presentation in a lot of institutes. When a lot of our entrepreneurs are going and listing in the public markets, they hold 5 and 10% of the company. In your company, if 90% is held by someone else and 10% is held by you, who runs the company? Whose stakes are higher? Is it you or is it the investor? Right? It's going to be the investor because they have much more higher stakes in the company. If you look at all the companies that are getting listed, the promoter or the founder stakes get diluted extensively. India is a tougher market. Just throwing money doesn't solve the problems. And so just raising a lot of money and then throwing it against marketing may make you successful, but you are losing control of your own company. You look at the top two, they are the best companies in the Magnificent Five, right? At the time of listing, even today, the CEOs or the founders own double-digit stakes. At the time of listing, they held 30-40% equity. Kotak Bank, Mr. Uday Kotak, was actually forced by RBI to go below 50%. Right? So this is what I called as promoter mindset. You want to make sure that you have at least 50% of your company so that you have a say in the company. Otherwise, you are going to be running it basis the other stakeholders who own a larger part of your company. We'll come to more. Okay. So I will come to this slide next. Who should raise from a VC and who should not? The first thing that you should ask yourself is, are you solving a problem or building in a market or an industry which is at least $1 billion in size? If you cannot become a unicorn, it is going to be extremely tough for a VC to invest in you. And I can have a longer conversation offline. When a VC invests in a company, they look at 40x return from that company. So when you raise from a VC, if you are going to raise 1 rupee from a VC, please think aloud that in the next 5 to 10 years, are you going to be able to return 40 rupees back to the VC? So the math at a high level, what ends up happening is, simplified version, a VC will invest in 10 moonshot ideas. Moonshot ideas being every idea has to be a unicorn. 7 out of them will fail, 2 of them will return capital, 1 of them will return money for everyone else. So the one who returns money has to return 40 times the money that they raised, and ahead of time a VC does not know which of the 10 companies is going to return the money. So when they look at you, they're going to see whether each of you is going to return 40 times. Does that mean you should not build businesses? No. It is just that you should not target VC as your source of money, or you should not think of yourself as a unicorn. There are lakhs of enterprises in India who have created a lot of value without having to go to VCs or without getting into the startup game, funding game, etc. So please think of these considerations. If you fall in this category, completely different path to take. If you fall in this category, a different path to take. So market size has to be greater than $1 billion. Okay, it cannot be a red ocean. Food industry में आप कुछ कर रहे हो, right? Low chances of VC investing in them. But does that mean that food industry is not a great business? There are so many entrepreneurs in food, right? So build that business, but don't waste your time on a VC. Gross margins have to be higher. You have to be on a treadmill. If you are with a VC, if you have raised money from a VC, you have to return the money in 5 years, 40x. So you have to run the hardest, and the VC is going to push you hard. When I was talking to people in the morning, everyone was like, okay, I need a VC, I need introductions to VC. And I've realized that a lot of entrepreneurs are not the right audience for VC investments. And we'll talk, in the next slide, we'll talk about what are the other avenues that are there. I'll skip this. A lot of these slides are dense. I do this as part of a 2-hour workshop for MSINS, etc., which is about how to build a sustainable business, which is raise less money, raise less often, but still build a business which is large and high, and in value. Okay, so this is a important slide. I know it is dense. I will parse this out for you. Okay, first let me tell you who are all the stakeholders in the funding ecosystem. Where does money, where can you raise money from, right? So first, if you are starting, where will you go to raise money from? At an idea stage, if you take an idea deck, okay, imagine yourself in an investor position. If you take an idea deck and go to an investor and say, I am going to raise money, what is he going to do? Whom do you go to when you have an idea to raise money from? Friends and family. People who know you. Please don't waste your time. Time is so 3 things entrepreneurs have: time, money, energy. Money takes time to come, but money and time and energy you have. Please don't waste them to go raise money from an unknown person. Your odds are extremely difficult. Go raise it from your friends and family. So that is the first step. If you have an idea, of course, the first thing is do it yourself, spend less, right? Use resources that you have. But if you need money, then it will have to come from your friends and family. If you're going to an unknown person at an idea stage, where nothing has happened, it is going to be 99% you will not raise an investment. You will lose time. But more importantly, what ends up happening in this is you get discouraged. And so it is important that you don't do things which will discourage you. Every idea has its own legs. It is important to execute. As in the morning, Madan said, bird in hand, right? You have to start. You have to execute. So first thing, instead of wasting time on sending these decks, finding investors and sending them the decks, start, execute. Get some validation of your idea. Get one customer who believes in your idea. Then your idea becomes more believable when you go to investors to raise money. When you go to an investor and say, hey, here's my idea, here's a product, and here's a customer, the conversation will be much more easier. So first you raise from friends and family. Okay. The second leg normally is angel investors and angel networks. Again, so fundraising is a supply chain. If you think of it as a pipeline, it's a relay race. One person hands it over to another, and so on, right? So friends and family will invest, then angel investors will come, then VCs will come, then private equity investors will come, then IPO will happen. At every stage, the earlier stage investors get exit. So the new investor coming in provides an exit to the... But what is happening in India, and we have to realize this, is our markets may not be big. So we have to now create a different kind of a pipeline. And the fantastic job that the Indian government is doing in creating this pipeline. So the suggestion that I have to you is, do not try to enter the pipeline, which is the traditional pipeline, which is the VC pipeline. We'll talk about another pipeline that you should get into. Right? So what has happened over the last few years, and let's see if this works here. Government of India has gone and given funding to every large institute in India. So the IITs, IIMs, there are a lot of labs around India. National Chemical Laboratory, Pune has Venture Center. IIT Bombay has these center called Sign. IIT Madras has a center called Tech Park. IIM Calcutta has a center. So every institute has a center. What does this center do? This center provides three things. It provides incubation. So you give equity, you get incubated at these centers, and you get all the support needed to build on your idea, whether it's on the product side, on the technology side, on the marketing side, and so on. Each center has got funding from different agencies of the government. So there's an agency called DST, Department of Science and Technology. So if you're doing any startups in this area, then you are eligible for DST funds. There is a department called BIRAC, which is Bioignition Research Grant. There's a department called MIT, which is telecommunications. So every single government department has created a source of fund and giving it to these institutes. These institutes have created committees and funds which you can apply to. Most of these funds come in three layers. First is a grant. A grant means you do not give equity, you get it free of cost. That grant gives you the ability to pilot your idea. So you will get it at an idea stage if there is an IP in the idea. Okay? So you go approach these institutes. Spend your time in finding the right institute instead of approaching VCs and angels. Find the right institute, get incubated there. Okay? If you go through the incubation well, you can climb the ladder of these funds, which is DST, BIRAC, at those institutes, or you can apply to any. So DST has a fund at IIT Bombay, DST also has a fund at IIT Chennai. If you are incubated at IIT Bombay, it does not mean you cannot apply to IIT Chennai. You can apply across India. And all the data is available online with full clarity, application process, etc., etc. So then you apply to some of these funds. So there are more nuances. I'll give you one of them. DST, for example, has three funds. One is a grant, then there's a seed fund, then there's a fund on top of that. So let's say you go to Sign IIT Bombay and get the grant, and if you execute well on the grant, you can apply to the seed fund. So grant is 25 to 50 lakhs, a seed fund is 50 to 1 CR, and the LEAP fund is 1 CR to 2 CR. Let's take the lower versions, which means between DST itself, if that is your vertical, you are able to raise 2 CR, and you get the steps. So you only need to focus on going through one step at a time. So this is one angle. So government funds are available across India. Please tap into them. Okay. Second, lot of impact funds have come up with grants, right? Bill and Melinda Gates Foundation, Tata S Foundation, MSINS has some nice grants, especially they have grants for women-led founders. So please tap into them. Every government, state government, Telangana has T-Hub, Karnataka has something in Bangalore. So every state government has a setup where you are able to leverage some of these funds. These are people feel it's bureaucratic. Trust me, I'm part of some of these committees. If you are good, you will get the money. A VC process is extremely more bureaucratic. It takes at least 6 months to a year to raise money from the VC. There is a higher probability for a lot of entrepreneurs in India if you raise from this channel. So other than government, there are these grants from various foundations that you can leverage. Another amazing thing that has happened, 25 technology innovation hubs under the TIH charter has been set up across India. So for example, IIT Kanpur has an IoT charter. If you're an IoT company, you can go and apply. IIT Kanpur has a defense charter, IIT Bombay has an IoT charter. If you're an IoT company, you go to that charter, and they have funded so many startups, and money is disbursed in like 1 or 2 months. So all the 25 charters are listed, TIHs are listed online. Find which is suitable for you, go apply to them. You will get intelligence on how to build your company. You will get your ecosystem companies, mentors, etc. So focus on that. Third, the last point, AWS guys are here. They do an amazing job. Microsoft does an amazing job in giving out credits to startups to build their technology platforms. And so you can do it free of cost. early on with these credits, and over time, then they will make money off you. So make sure you tap into a lot of these free cloud credits that you get as a new startup. Fourth, there are private accelerators coming up. 100x.pc in Bombay is one, who will take a sizable equity, but they will help you cross that, get to a point where you become VC fundable. A VC fundable company, and so you have to realize that it is not important to become a VC fundable company. You can still become a sustainable business. But a VC fundable company is a company which has figured out that, okay, there is $1 billion market that we can capture, and with your money, we can get to that market much faster. So the only thing a VC does to you is gives you money to capture a market as fast as you can. They are not going to give you a lot of intelligence and so on, which the other players in the ecosystem will bring to you. Yeah, so remember government first. Second, if you want grants, if you are especially in clinical trials, right? It's a long journey. Make sure you get as many grants as possible. There are enough and more coming up. So go for grants. And third, look out for credits from corporates like Google, AWS, and Microsoft as well. We'll not talk about this because this is the VC journey. Yeah, I want to pause here because what I talk about beyond this point is for startups who are at the second leg, where they've raised money, okay, and now how do you build a sustainable business? How do you make sure that you're not trying to raise money every year, which is what a trend has become? Happy to take any questions at this point. How many of you were aware of the government grants, all these ecosystems? How many of you here are DST, BIRAC funded, etc.? Okay. sorry. I find that this is large, and I'm amazed at what Government of India has done over the last 5 to 10 years by incubating these startups at a grassroots level through these funding sources. The money gets dispersed so fast. Within 3 to 6 months, a startup can have funds in their account. Any questions? Happy to take them.
Okay, hi, I'm Richa.
Hi,
and
Richa.
I have a startup that is incubated at SNDT Wise, Mumbai.
Okay.
So, the issue is that the university expects us to have an MVP, and to make an MVP, you need funds. So there's a catch-22 going on, and it's just, I don't know what is the right way, because this is the first time I'm going the startup way, not a traditional business way. So I really appreciate the information you gave on that left side. It was really amazing, because when I came here, I'm here from Bangalore. When I came here, I was just like, okay, let me just raise some funds and go about it that way. Yeah. So this is great, because without getting into any kind of stress or stress mode and so on, you can raise through grants. But how do you cross that hurdle of having your MVP, or what is the steps? Like, how will they just give you the grant like that?
So
we are already incubated, so I don't know what is the right.
So okay. When there's a wave, there are good ones and bad ones also. So there's a wave of a lot of incubation centers in India. So I want to give you this thing that when you sign up for an incubation center, you are going to give equity. So make sure you write on a piece of paper what you're getting in return. There will be incubation centers who are saying, we'll give you XYZ, but is it on paper? There are at least 50 good ones in India where you will have funding sources. All the IITs, all the IIMs, so take the top 20 management and technology colleges, and they have it. But I'm not saying they are the only ones. So for example, in Bombay, in Bangalore, you are from Bangalore. IIM Bangalore is an amazing center. And they not only have an incubation setup, they have a lot of other programs for entrepreneurs. So NASCOM 1000 startups, women's startup initiatives, right? So amazing. And once you get into that ecosystem of NSRCL, you will get more avenues. So it is important to tap into the right partner. Ajay ji at the beginning mentioned strategic partner, right? So you have to sign up only one incubation center. But make sure you are careful about which one you pick. Better to pick closer one, but best to pick who will give you what you need. So some centers will be better. IIM Calcutta center is better for the eastern market, for example, right? But IIM Calcutta over time I have found that they are also better for certain industry verticals. So where do you come from? Thoda research karna padega. Plus talk to 3, 4, 5, shortlist 3 and then go sign up. So that is one thing. Now, I don't know about the SNTT center, but every incubation center that I am recommending to sign should have some funding source. If they have funding source, then they will tell you, no, this is my expectation, you reach here and then we will do. So for example, if you have a great idea, most of these incubation centers have something called as a grant. Grant may be as small as 10 lakh rupees or 25 lakh rupees. They'll give you that, say prove it, and then you get a larger equity fund. Now, I don't know about SNTT, so I'm saying, you go to the other centers. The good part is that the other centers do not preclude only you from applying. So for example, you go and apply to the Venture Center Pune. There are grants. There's a grant called BIG, but it is only for BIRAC. So for your setup, we'll have to see where. IIM Calcutta has certain grants from SIDBI, NABARD, etc. So you can check out those. All websites have the details and go and apply for a grant there. That grant will help you get to a POC. And then you can apply for subsequent equity rounds also. Does that answer your question? If needed, if needed. I do want to point out one thing. Your startup or business has to have a unique value proposition. If you are building a trading entity, then probably these guys will not be able to fund you, right? The fund is for building IP, building technology, creating impact, solving rural problems and so on. So you have to make sure you have a unique value proposition. Not everyone's going to, I've seen cases where people will say, okay, I want to build a fashion business, apparel business. Very possible that you will not get that funding from these sources. You will have to generate, if you want to build a fashion apparel business, you will have to generate it from your friends and family. But for people who are solving a real technology problem, then there are enough and more avenues to get funding in the government ecosystem is what I'm trying. And even technology problems and also problems related to rural. So I thought you were building something on the art thing. So there will be some or the other avenue who wants to contribute. So for example, I am on the IIM Calcutta committee and they are conscious about empowering their rural entrepreneurs or entrepreneurs who are creating impact in the rural community. So.
Hi.
Hi,
just
Vijay.
a quick follow-up. So if I may have your permission to add up on what you were sharing.
Sure.
Like I'm a business guy who eventually now have started coding. So for POCs, generally I've ended up using a lot of no-code tools.
Yeah.
That helped me rather before even onboarding a tech person. Having some of these no-code tools have helped me to do that POC or get that MVP done and test the idea out before you write a single line of code.
Sure.
And that helps. And maybe like for people who are in the business end might be able to address that as well.
This is for all the tech-based startups that there are enough and more no-code tools that you can use to create your POCs or MVPs before you actually raise money and then build a larger platform. Exactly. Thank you, Abhijit. Any questions?
Yeah, Yogesh Tiwari.
Yes, sir.
What are the steps one has to take to protect his IP before approaching a VC?
See, ideally you need to apply for intellectual property, patent rights, etc. Right? They come at a lot of cost. So, MSINS has a grant for just applying for patents. So, some of the problems, the thing is, government has done a fantastic job on giving these out, but that information is not percolated. So, if you have real IP and you want to apply for a patent, then you'll be able to raise a grant from MSINS. Now, other state governments also have these, so you'll have to go and check, or you'll have to check with the institutes also if they have a grant specifically for IP. But they can only do so many, so your IP has to be extremely strong for them to fund you. Otherwise, you'll have to raise resources. It takes about 20 lakh rupees to get a patent, so you'll have to raise that fund from your friends and family.
Oh, if I share the thing with the VC,
Can you speak a little louder, please?
if I share my idea with the VC, it can get shared with other people. So how do I protect that?
Sir, so to put it a little bluntly, ideas are dime a dozen. Okay, don't worry about sharing your idea. The execution is the 99% difficult. If your idea really has a moat, then it is going to be a scientific idea or a technology idea. Then it is anyway not going to be easy for someone else to replicate it. There used to be this time, I don't know how many of you have been in that time, where there was a concept called non-disclosure agreement, NDA. Today it is dead. No one signs NDAs, okay? So, which means that ideas are out there, information is out there. If you are worrying about that, it is going to be difficult to make progress. Your moat, so to speak, will have to come from your execution. Or if it is coming from idea, then it has to be intellectually difficult for anyone else to replicate it. In fact, if you see, VCs are driving disruption in the ecosystem by throwing too much money at it. So idea doesn't matter. After a year, once your idea is out, someone else will come, because what happens is, let's say Q-commerce or Zeptos, and they become popular. And in one startup, only one VC can invest. So in Zepto, someone invested. Now all other VCs want a part of this quick commerce pie, right? Because it's the wave. So they will find another startup and invest. And this leads to war, which means that idea doesn't matter. Everyone will fund so much that they will fight it out. And so don't worry about the idea, focus on the execution. You need to be the first and the fastest, so that everyone else who's going to catch up cannot. You're always innovating and leading the way. Yeah.
Thank you.
Hey, so I'm Ranjit. So I'm actually a VC.
Hi.
Hi. And some of the information you provided was very broken. So I'm a deep tech VC.
Sure.
I've been doing deep tech for 30 years now.
Okay.
Multiple successful exits.
Sure.
So when you said 25% IRR, right? But you say 40x in 5 years, those numbers don't add up. So it actually, what we're looking for is 3x returns in 10 years, because 10 years is a lifetime of a fund, right? 3 to 5 is considered good enough. That's where the 25% IRR comes from.
Sure.
The other is when you referred 100x VC.
So
they actually
this number is not broken. We can do the math offline.
No, I know the number is broken. It's my day-to-day job, right? The other thing is 100x VC.
So,
I would not recommend.
Ranjit, let's do this math right here, okay?
Yes.
So that people have confidence in the numbers that have been given out.
Yeah.
Okay? 100 rupees simplified, invested 10 rupees in 10 companies, 7 die.
No, let's do it on IRR in the Excel sheet,
Yeah.
because that's how the IRR is calculated.
I've done that,
Yeah.
and so it's coming from
That's
there.
fine. So you can agree to disagree.
Yeah.
The other thing is 100x VC, they do 15% undilutable. So why would you say a company coming out of 100x VC would be VC fundable? Right? That's the other question I had. I mean, there's a lot of other things, but I want to stick to facts that are actual facts, right? So what's your opinion on that?
What's my opinion on why will a
100x
100x company?
VC has 12 to 15%
They
undilutable.
take 15%.
Undilutable.
They take 15% with a 1.25 CR investment.
Correct, but that's undilutable.
At a real idea stage.
No, but it's undilutable, right?
It is not undilutable.
It is undilutable.
They have pro rata rights, but it is not undilutable. It
I
is
have
they do
funded-
something called as a safe.
Maybe
No, I know what a safe
Yeah.
is. I know what a safe
So
is.
they do something called as a India safe, which is
Ranjit and Sachin, if you can take this offline, with the interest of everyone.
Yeah, no, I understand, but I want to make a point here that it's not helping the entrepreneurs and the innovators if incorrect information is shared, okay? And yeah, I'll take it offline.
Sure,
Whoever
sure.
wants information, I can share with them during the lunch session.
Thank you.
But there are different ways to fund companies, and I agree with you that what you provided is one way to fund it.
So that's the idea.
Yeah, I agree. I agree with you. But some of the VC numbers you provided were broken, is what I was saying. Right? Thanks.
Sure. Thank you so much, Ranjit.